I hear a lot about construction, obviously technology. What other industries are we seeing some growth in that may surprise people?
Well, I can speak to the commercial office space. So I know in San Francisco, technology accounts for a third of demand right now, but also business services, financial services, professional services, and health. Those combined account for 40%. So it's more than just technology.
Yeah, and healthcare is huge. Shockingly, adding tens of millions of people to the rolls of the insured actually increased the amount of money that we spend in the healthcare system. Who knew? And health is actually an area that's a particularly high multiplier. So several years ago, the Economic Institute was asked to take a look at the economic impact of the Affordable Care Act. We were being told at the time that it was going to be this gigantic job killer. Lo and behold, we've actually seen private sector job growth every single month since we passed the law. Not necessarily because of the law, but it stands to reason that if you're pumping a tremendous amount of money into a sector with a high multiplier, you're ultimately going to see economic growth, and there's big growth going on in the healthcare sector.
Right.
Go ahead, Tom. Okay, I just want to make a point connecting the question in your comment about the stock market. I think one of the things to remember, and Jerry said this, is that the vast majority of jobs in American services. So what are services? A lot of people don't think about what that actually means. Well, one is healthcare. Healthcare is a huge employer. With the aging of the population, it's going to be an increasingly important employer. We see this in Japan and other countries a little ahead of us on the demographic curve. We're going to see it here. Education. One of the most important investments we can make in our economic future. That's services. Housing is actually services. And government is services. So one of the areas in the economy that hasn't recovered in terms of employment is state and local government employment. And it fell a lot, and federal government employment. So government employment fell a lot during the recession. It's recovering very slowly. But again, you think about Apple or Amazon or Google, that's going to move the stock market because of their valuations. But the economy is really more in these more prosaic areas of the economy.
Right. So I want to make a comment about technology. So we think about technology as computer design and software houses and the like, but it really permeates the entire economy now. So we just mentioned healthcare as a major driver in the expansion of employment. But if you think about companies like Kaiser Permanente, where are they expanding? They're expanding in the IT area. They're expanding in technology. Yes, they're adding a few more doctors and nurses and orderlies, but the real expansion, which is demanding office space, is in technology. It's just not classified as that. And so technology has really been driving the expansion in jobs in almost every sector.
Yeah, and as a quick plug to get everybody to stick around for the panel, we have the Chief Information Officer of Kaiser Permanente who's going to be talking about precisely that. Sir in the front.
I'd like to hear the panel's thought on discussions between the relationship of the innovation economies that you've all been discussing and the training and skills of those people who were left without work because they didn't have the skills for those jobs.
Yeah. Well, it's huge. I mean, one of the things, we just put out a roadmap for economic resilience through the Economic Institute. And one of the things that we and others have remarked upon is that there's a 3 million person, standing to be soon, a 3 million person skills gap in California. So we're producing these jobs, we're not producing the people for the jobs. So you need to be thinking really across the continuum of education there, everything from early childhood education to retraining within and upskilling within the workforce. And we really need to be making significantly more substantial investments in that area if we want to continue to power this economic growth.
The technology will always advance at a far quicker rate than our public institutions and our educational institutions, for sure. So tying educators more tightly together with employers who are on the front edge of seeing how their skills demands are changing will help.
I think one thing that's changed also is that when I was young, you probably thought I thought I was going to go to college, get a job, work at that job for the rest of my career. That's just not that's not the current situation, and that's not going to be the future. So lifelong learning, going back to school, retraining, reinventing yourself multiple times during a career, I think it's going to be what's going to take to be really successful.
And so let me add, in this economy, this is sort of part of your question. is this question of, well, robots are taking everyone's jobs, microprocessors are taking everyone's jobs, where are the jobs going to be? I think the major growth area, in terms of percentage growth in jobs, is going to be in education. Because just as John said, education is now, certainly for our kids, is going to be a lifelong thing. And you need educators to bring this new technology. It's moving so fast that we can't individually sort of sort it and process it and keep up. We need educators to keep our skills current as we move forward. So this is a huge growth area, is keeping the workforce attuned to current technology.
Yeah, we got to stay ahead of the robots. Sir, here.
I think perhaps this is too much of a hyper-local question, but for San Francisco, Jerry, you mentioned the risks associated with unicorns, hexacorns, decacorns, and certainly we're seeing some risk factors, some kind of warning flags come up with increases in sublease activity and kind of lowering of Square's IPO value. What other things should we be looking for? In the last 3 years, growth in venture capital in those companies, particularly have driven San Francisco's local economies. What should we be looking for?
So I would look at elevated rates of startup failures because they ran out of money. In addition to all of the things that you're talking about, the early indications are IPOs that came in significantly below projections, and the movement of pension funds and sovereign wealth funds out of funding these sort of more speculative startup ventures into kind of more traditional investments. That's sort of the early warning signs. But look for kind of contagion that happens if you get elevated rates of startup failures.
Yeah. Sir in the front.
I think Jerry and Tracey both mentioned, one of the factors in the Bay Area to help the growth is adequate housing. And Tracey, you also mentioned transportation. I was a little surprised not to hear anything about adequate water supply. Do you see that as a factor for potentially hindering our growth, not just aggressively?
Didn't it rain yesterday?
Yeah, we've totally taken care of that. No, it's worse than that because it's either too little water or too much water, right? Whether we're looking at the impact of the drought, which is obviously significant, not necessarily in the Bay Area as much as in other parts of the California economy that are more heavily reliant on agriculture. But there's also the prospect of having a significant storm. The Economic Institute last year put out a report surviving the storm, saying that a significant storm on the scale of Sandy could have $10 billion of impact in the area. And there's that little sea level rise thing that folks have been focusing on. We're building in a lot of floodplains here in the greater Bay Area, and some of our tech titans are building on pretty low-lying land. So there are going to be opportunities for a public conversation around that. There's a Baylands restoration initiative that's going to be on all 9 counties' ballots probably coming up here in a few months. But water is definitely a huge factor, whether too much or too little.
So let me address the economics of water. 80% of water delivered in California, so this doesn't count that which we allow flow into the Delta for environmental reasons and other rivers and estuaries in California, but 80% of the delivered water goes to agriculture. And if you were to just have a 10% reduction in that, think about what that percentage is then that would go to urban uses. So in that sense, we don't have a shortage of water. What we have is a very complicated and convoluted set of water rights in California and a pricing system that is also convoluted. So for example, in San Diego County, which San Diego County, even though it's under mandatory conservation, actually doesn't have a shortage of water. But San Diego County purchased water from the farmers in Imperial County. And it was sort of a torturous task to do that, but they found a price where farmers said, okay, I won't grow food. I'd rather sell water, and they sold their water rights. So this is really an economic problem, not so much a problem of scarcity of water. It's pricing it so that it goes to the most valuable uses.
Well, it's an economic problem that's at its root a political problem, right? Almost every issue that we have here in the Bay Area in California, whether it's housing, transportation, these aren't technological problems. We don't not know how to build houses. And in fact, for that matter, they're not even really public preference problems, because when you poll on this, the majority of the public actually wants to see done the things that need to get done. They're political problems. How we structure our governments, elaborate and arcane sets of, elaborate and arcane actually refers to basically everything that we have to regulate everything, including water here in California. Those of you who are engaged in local governments here in the Bay Area know that they are pretty elaborate and arcane. And that's, I think, a significant question. It's on some level, it's political risk. Will we be able to navigate the extraordinarily complex and Byzantine sets of governments and government regulations that we have in order to do the things that we know how to do and that we want to do to improve our economy? Sir.
Yes. Micah, earlier you spoke that you were a little bearish on the outlook, the economic outlook. And Jerry and John both talked about the recession. So I feel safe in asking this question. I wanted to ask some knowledgeable people for about a year. Many of us saw last year a number of times TV broadcasts by a former Congressman, Rand Paul. And he spoke of not just a recession, but he spoke of a coming currency crisis and a destruction of wealth as we all understand it. But it was just a question of when it would happen. Could you all comment on the likelihood, God forbid, that would ever happen? I would appreciate that. To hear your thoughts about that.
So can I go first on the Ron Paul question?
It's your house, you can go first on all this.
Well, it was Ron Paul, a former congressman who's been making these statements. And really, it's just he has a very strong view that our current monetary, basically financial system is, in his view, fundamentally broken, and is going to create at some point some super high inflation, some other big problems out there. And so that's been an argument he's made for decades, and has specific reforms that he's suggested, as his son has too. I don't think that's really the issue that we're talking about when we're talking about recessions. I mean, I think that the U.S. economy is incredibly dynamic. It's very resilient despite the global financial crisis. We didn't have a Great Depression. The stock market fell, but it's completely back. Housing prices collapsed, but they're essentially back. I think that the real risks here are about another recession. They're not about a collapse of the financial system or some hyperinflation or something like that. And again, I think Ron Paul was saying that 20 years ago, he was saying 10 years ago. It's his strongly held view that our system is fundamentally broken and needs to be changed. I don't think it's based on any real economic risks that we're really seeing in our crystal ball. I don't know.
Yeah, so I agree with that. And just one other comment, which is when we speak about the next recession, which will happen at some time, we're not forecasting it to happen in the next few years, but at some point it will happen. Recessions are about imbalances and correcting imbalances. There are very few imbalances in today's economy, and so when we get the next downturn, sometime in the distant future, when we get that next downturn, we expect it to be a mild downturn. The 2008-2009 recession was severe because we had some severe imbalances, and those just are not existent in today's economy.
Yeah, and I want to be clear. I almost don't want to be bearish because there's such insane, that's a strong word, insane analyses of what's going on in the U.S. economy, that it's really weak, that we're in some kind of crisis. That's a bunch of, that's insane. That said, all I'm saying is we haven't abolished the business cycle. We've been in a particularly long economic expansion. I expect that economic expansion will be coming to an end relatively soon. But I almost feel as if I shouldn't even mention that just because there are some people out there that are
But what you should do is the 40% rule, right? Which is what forecasters use. There's a 40% chance of recession. Next year, if we don't have a recession, you say, I said it was unlikely.
Right.
And if it does happen, you say, I told you there's a recession coming.
Yeah, well, I'm going 60%.
Okay.
I'm going 60%. Sir.
Yes, I'd just like to ask a question in regards to economics of we talk about job growth and the structure of job growth and everything. You look at some cities and their median income is very low and structure, and it's because of the economy of the people there and the types of jobs that we do have in the areas, not like in San Francisco, but the far out regions like in Contra Costa County and the far east county.
Right.
You have a different type of people living out there. How do you deal with that, and how do you make it grow? Being a public official, I look at that every day and say, okay, our median income in our city is $32,622.
Right.
Okay, so how do you, when you're selling houses for $400,000, and you have to look at the median income structure, how do you put that together and make it work for those people to buy these houses? And people are coming, what we're doing is our city's growing, because people are coming from outside coming to our city.
Right.
They're bringing their income with them to be able to afford the housing. But we also still have to provide affordable housing in that city. So how do you deal with that as an economist?
Yeah, we're gonna end on this question, and I'm really glad that we are, because Tracey mentioned this, and it is absolutely critical that we have broadly shared prosperity, not only in terms of demographics, but also literally geographically broadly shared prosperity. So we look at this so-called recovery, it hasn't been a recovery for a lot of people. Poverty has actually gone up when adjusted for the cost of living, even in the Bay Area during this so-called recovery. So how do we think about that, and how do we get more broadly shared prosperity? How do we get the jobs and housing?
Poverty's gone up 16%.
Yeah, exactly.
In 2.5 years.
And I don't think people really know that. And so that's a really critical issue, and I think it's a really good one to wrap this panel up on before we move into the next one.
Yeah, so let me make a few comments on that. The first is that California is really an economy in transition, even more so than the U.S. or leading the U.S. And California used to be an economy that was heavily dependent on large-scale manufacture. And those were the kinds of jobs for people with a high school education, some mechanical skills. Those are gone, even though we're manufacturing more today than we ever have. But those jobs that are for people with lower skills and that use a lot of land are going to places where land is cheap and labor is cheaper. And that's been going on. That's not recent. That's been going on for a long time. So that's the first comment. That's a kind of transformation. And that's statewide, it's going to be nationwide, not something we can do a lot about. What we need to do is kind of manage it. The second comment is that California is a very, very diverse state. And we tend to, in Sacramento, as a part of state policy, have policies for the state as a whole. And it would be better if we looked at regions within the state and said, okay, so this region's got a different characteristic, and maybe our policies should be different. At least consider that. The third has to do with housing. And I've got a paper that's going to be released on Tuesday by the Simon Institute for Real Estate Studies, and it's on pricing of natural amenities. So the basic story is, which we all know, California's a great place to live, and it's amenity rich. And we think about, here in San Francisco, and well, Bakersfield and Fresno, maybe not so much. But Bakersfield and Fresno, you think about Dayton, Ohio, or Youngstown, Ohio, maybe a lot. In fact, a lot. And if you actually look at the data across the US and just take measures of natural amenities, of topography, of water, of climate, you find that explains why California housing, most, not all, but pretty close to most, not Silicon Valley, which is a whole different story, but with 7% job growth year after year, but it explains most of the cost of housing everywhere in California. And that's not going to change because there's more demand for living in California than there is space and than there is housing. And that's why in the forecast that I gave, it was, we're not going to get that immigration because of the cost of housing, just because it's a great place to live.
What we're seeing is multifamily living in the same house.
Yeah.
Yeah, and that's what happens when the price goes up. You conserve, economize on how much housing you consume, which is why some of these affordability numbers are not quite right. I'm willing to live in a small apartment in Manhattan so that I can be part of what's happening in Manhattan. The same thing is true in San Francisco. I'm willing to have a smaller place in your community just because I want to live there as opposed to in Texas.
Okay. Well, thank you so much to the members of the panel, and we're going to bring up our